Hi everyone, I'm Polly and I'm excited to share some valuable insights with you today. In this video, I will be discussing the hammer pattern, a powerful candlestick formation that can provide valuable trading opportunities. But before we dig into it, I would like to invite you to subscribe to my Telegram channel, of course. By joining, you will have access to live trading session where I share real-time analysis and strategies with my subscribers. It's a great way to stay connected and be part of a vibrant trading community. So, what is a hammer candlestick? A hammer is a price pattern in candlestick charting that occurs when a security trader significantly lower than its opening, but release within the period to close near the opening price. This pattern forms a hammer-shaped candlestick in which the lower shadow is at least twice the size of the real body. The body of the candlestick represents the difference between the opening and closing prices, while the shadow shows the high and low prices for the period. I wanted you to know how to use a hammer candlestick. The chart shows a price decline followed by a hammer pattern. This pattern had a long lower shadow, several times longer than the real body. The hammer signaled a possible price reversal to the upside. Confirmation came on the next candle, which gapped hard and then saw the price get bid up to close well above the closing price of the hammer. Traders usually step into buy during the confirmation candle as stop loss is placed below the low of the hammer or even potentially just below the hammer's real body in the price is moving aggressively higher during the confirmation candle. So, let's observe how the hammer pattern performs in the actual market, specifically with the dollar and Japanese yen currency pair. Without delay, let's open it and initiate a trade. Well, I'm there for a duration of 3 to 4 minutes, investing $500 with the intention of making a profit. Now let's return to the trading view. What do we see here? So allow me to expand the chart to full screen. We experienced a downtrend. The EMA 50 also confirms the persistence of a downtrend. So guys, following that, we had this formation taking shape. Let me highlight it. So, what does it indicate? We notice a significant shadow and a small body to be breaks a substantial lower shadow as a petite body. In the case of a green hammer, indicating bullishness, the preceding trend was downward. We anticipate a market reversal towards an upward movement. Approximately, it would resemble this. The hammer is a robust pattern in technical analysis. It performs well. Achieving a success rate of nearly 95% makes it quite reliable. It has proven effective in the past and continues to be successful as it reflects the fundamental essence of the markets, which revolves around the interplay of buyers and sellers. As far as I know, the market is driven by supply and demand. Considering the current situation and this particular example when we analyze this hammer, it gives us an indicator that where is already a string of sellers and buyers are prevailing. What does it mean? When buyers dominate the chart, ascent due to absence of sellers. In other words, if everyone is buying, the chart rises. If everyone is selling, the chart falls. A concept familiar to all. Additionally, we have an interesting observation here. The numerous dodgy candles. I will create a video discussing them as well. These are reversal patterns that have reversed the market. Moreover, we have a mirror level here, which means we can observe. Let me draw it now. Here we see a rejection, a clear rejection right at the point. Allow me to sketch more elegantly a rejection here. So, previously, it acted as a resistance level. and now it acts as a mirror level, providing multiple confirmation for a current trade. Let's take a look. There is approximately 1.5 minutes remaining. At the present moment, the trade is performing admirably. I don't see any reason for it to close at a loss because the hammer pattern is quite robust. While there may be essential false hammers, they are existentially rare. When compared to other patterns, the hammer stands out as the most profitable and accurate candlestick pattern. So, if we examine the historical data, we observe a decline followed by the formation of a hammer. Thus, the primary structure comprises a small body and a long shadow. We see a small body and a long shadow, and right after that we witness bullish candles. Therefore, all that remains is to await the outcome of the current trade. In summary, there is just about half a minute left. So, as you can see, our trade is closing perfectly with a profit. As a noted early, nothing could have impeded our success. An important note when trading based on the hammer pattern is to wait for confirmation. Therefore, we need at least one green candle, equivalent to the size of the preceding red candle before the hammer. In other words, we should observe this formation. To elaborate, we see a red candle of a specific size, followed by a hammer, and then a green candle that matches the excess size of preceding red one. It should not be smaller. It can either be larger or the same size as the red candle. If it's smaller, we need to wait for another candle. We must surpass the size of the red candle that comes before the hammer. If we surpass it, it provides an ideal sign for a buy. Well, in our case, for buying. You might have observed that I entered the trade during that particular candle. I noticed that it was already engulfed. I predicted that it would surpass the size of the preceding red candle. Based on the observation, we entered the trade, made a profit, and earned over $400. Thank you for your attention, and I am delighted that you watched the video so far. If you enjoyed it, I kindly request you to show your support by liking it. Additionally, I encourage you to subscribe to both my YouTube channel and my Telegram channel to stay updated with my content. By joining my community, we can foster a friendship and encourage further discussions. I appreciate your support. Bye.